Welcome back to the channel ICT Traders. In this video, I will be taking time to explain ICT inversion fair value gap for you and how to practically identify them on your chart. And we'll go into the practicals of finding an entry with an inversion fair value gap. But before we go into that, you need to understand what exactly is a fair value gap. A fair value gap is simply an imbalance in price action. In order to easily identify a fair value gap on your chart, you need at least 3 candle price action, either in a bullish direction or in a bearish direction. What I mean is that if you have these 3 candlesticks, 1, 2, 3, you need to see that there is a gap in between the low of the first candle and the high of the third candle. Since this is a bearish candlesticks, the low of any candle can be found on the wick, and then the high of any candle can also be found on the wick. So if there is a gap between the low of the first candle and the high of the third candle, you have your fair value gap. So ideally, if you're trading in the foreign exchange market or any financial market, what you expect to see is to see price delivering liquidity in such a way. This is a bearish movement, right? And once you see price makes this kind of movement, we expect price to come back to this particular fair value gap, which is an ideal way of trading this kind of price action. And we expect to enter for a bearish movement once price comes back to that fair value gap, and we target the draw on liquidity on the opposing side. Our stop loss normally is above this particular high. So in a situation where this fair value gap fell, if this fair value gap fell, we can use it for our own advantage. When I saw this lesson from ICT, I almost said this is like a revenge trading. All right. If a fair value gap fails, we can use it for our own advantage. It is called inversion fair value gap. Now, seeing that this particular fair value gap has failed to reject price, we can use it as a support level to go bullish. All right. So look at this. As price came, fair value gap fell, we can use it to go bullish. So when we see price come back, we can use it as our support level, or what we call an inversion fair value gap. All right. So an inversion fair value gap, in simple terms, it is simply a failed fair value gap. Once a fair value gap has failed, we can use it as our inversion fair value gap to go bullish. In this case, since we're dealing with a bearish market, so this is a CB, sell side imbalance, buy side inefficiency, is a bearish fair value gap, and now it has become an inversion fair value gap. That's as easy and simple as that. So let me go to the chart and show you some of the places you can see an inversion fair value gap. I've actually marked some right here. So look at this. Price actually reached out to this area, and we can see fetching liquidity right below here. Liquidity is money. So all this place is filled with money, and price have actually reached out to all the liquidity here. Now, ideally, if you're trading this kind of concept, let me show you what happens. What you do normally, you will want to take your trade from here. If you're trading ICT concept, your fair value gap is here, and as an ideal fair value gap trader, you will want to see price come back to this fair value gap and then easily take a trade from this fair value gap. Okay. Now, in a situation where this fair value gap fell to hold price, let me show you that. We have our entry. Normally, entry is within the consequent encroachment. That is the 50% level of a fair value gap. That is the most strongest fair value gap area. If anything happens, we don't want to see price closing above the 50% of that particular fair value gap, especially when that fair value gap is big. Now, what we do is to take trade from there, ideally. So if in any case we find out that this fair value gap could not hold price, and then price is closing above the fair value gap, it is an indication that this fair value gap is not as strong as we thought it is, especially in an area where price have already taking all the sell side liquidity. In this case, you can see all the sell side liquidity has been taken. So this is an indication that price may eventually head for the opposing liquidity. The draw on liquidity is actually here this time around. The raw liquidity is actually here. So this is when we will implement our inversion fair value gap concept. Okay, so let's get into that. You can find the original video on ICT official YouTube channel. Inversion fair value gap was explained in detail right there. So this is now our inversion fair value gap. So with this knowledge, now we can expect this fair value gap to act as a support level, okay, for that case. Now you can see that price came back and used this fair value gap. Notice how the body of these candles reacted around the half or the middle of this fair value gap. All right, you can see how precise and easy it is to identify these things. So that is an inversion fair value gap. It actually targeted the opposing liquidity. This is it. All right, right here you can see it reached out for this opposing fair value gap. It is called inversion fair value gap. Let me show you more examples. Here is another example of an inversion fair value gap. Guys, look at this. Now, I told you that this concept has to be used with every single ICT concept. You cannot just use it single-handedly. Now, notice how price reached out for this old area of liquidity. This is an order block. Let me show you this place. Notice how price reached out to this area, and then let me just adjust it so it can be proper. Okay, so notice how price reached out to this place. So from that, you know that there is something that is happening here. Look at this. If I were to take out everything right here, you will notice that price has reached out to this fair value gap. This is even an order block above it. I know you will ask this question, what if there is an order block above it? You're going to see how that price action is actually behaving around that place. Okay, you can see. So this order block has just failed. If you are going by this order block, price have actually taken you out, because you can see this fair value gap has closed above it, and it is an indication that there is something fishy about this. So price is coming back. This is an indication that we may use this fair value gap as an inversion fair value gap, and price has shown that by coming back to that place. Let me see if I can just give you an example of that. So the middle of this fair value gap is a perfect place for trade entry, and your stop loss can be just below the fair value gap. And look at it, we can target the opposing liquidity. All this place is liquidity that is residing right there. All right, so you can see, notice how this price came back to the middle of this inversion fair value gap. It used to be a fair value gap, and now it is an inversion fair value gap. All right, so this is what is called an inversion fair value gap. Let me show you more examples. Another example is right here. I just took time to just find all the places where an inversion fair value gap played an important role. All right, look at this, guys. Price came fetching all the liquidity below here, right here. All the liquidity below here, price fetched it. And I told you, you will always see this around some certain level of price action. So this is it, fetching all the liquidity there. Ideal trading style will be, want to take trade from this fair value gap, especially the consequent encroachment, that is the 50% level of the fair value gap. When you see a very big fair value gap, the consequent encroachment area is important. And look at what happened. Price came, we have violated this fair value gap completely. We have violated that fair value gap. So once we notice this, especially in such kind of areas, we can use this fair value gap for our advantage. Middle of that fair value gap can be our entry, and our stop loss is obviously somewhere around there, and we can target the opposing liquidity, all this area, starting with the ones we can have available somewhere above here and those areas. So this is your inversion fair value gap. All right, you're going to see this happen time and again. So an inversion fair value gap, in simple term, it is a failed fair value gap that has turned to like a support or a resistance area. All right, so please don't forget there is a little one here. Let me show you. This one, price push above this, liquidity came back, leaving this very big fair value gap. Look at this very big fair value gap around here. All right, that is a very big one that we can see, and price came back because this one was supposed to reject price to the upside from areas around here, and price came back and used that place as an inversion fair value gap coming down to this area. Guys, you can go ahead and check it on your chart. I just tried to re-explain what ICT has already taught. You can find more of the videos on ICT's official YouTube channel. You can go there and check it, guys. Thank you for watching. Make sure you subscribe to this YouTube channel and you turn the bell notification. If you have any question, let me know in the comments. I will be right there to answer you. Thank you guys for watching. See you in another video.